Good afternoon and happy Friday, traders. This is Christian from Tribeca Trade Group, and this is your end of day and end of week video for the 24th of July. So, a couple themes that we'll go over for the day. We'll talk about today's price action in the indices in the individual names, and then I'll also give you this week's performance as well for the indices and the sectors to see where there is some relative strength. And as always, my thoughts ahead and what I'm looking at in my overall perspective. So, theme of the day, downside continuation. But overall, to me, it kind of looks like the usual dip, market dip that we have to get through. So I don't particularly see anything really shocking in the market. I think that, a couple of things that we've talked about now a couple of times, that it's earnings season. We have a huge earnings week in front of next week. So, this is one of those weeks, I think, to kind of, there'll be some trades that we'll be looking at for earnings, but it'll be a lot of kind of reading into the information, listening to which companies are doing really well, like Sam Adams, for example. My goodness, look at this stock. Right, so that's what we want. That's what we want to look for, and I think that there are going to be businesses that are going to be doing this type of thing. Isn't that amazing? So I had put this stock in the Tribeca Trade Group portfolio, talking about. By the way, there's some really good lessons to look at in just this particular stock. So this is a daily chart. It's called Boston Beer, but I refer to it as Sam Adams, and it's definitely Boston Beer because now they have Truly, which is one of the big drivers of the sales. But I had put this name in the portfolio. Let's see if I can find it really quickly. So if I go to our TTG portfolio, and by the way, I locked in gains in this. It was just seemed too silly. I think that sometimes these names, when they get crazy, they like the move like this, they can continue to go up a little bit. But for me, I'm fine with the gains that I got in this. Let's see, did I put this in? It wasn't in here. Deleted docu. That was in April. I think this happened. Okay, so here we go. Here it is. So I put Sam Adams in on May 5th. So you could have said back here, oh, he's crazy. Look at how much this name has gone up. It's already gone too far. I'm going to wait for a pullback. Well, you never got a pullback. Here was the 5th. You did get a little bit of a pullback here, but it's one of those reasons why I'm a trend trader, because even though I purchased this when the stock was expensive at $500, I sold it today at, I didn't see the final sale price, but let's say $810. I mean, are you kidding me? So to me, that's what trend trading is all about. It's not buying the names that, I saw a lot of people who were looking at Intel today. I don't, and I asked a couple of traders who were looking at Intel, what do you look at, like, why, what gets you excited about Intel? Why do you want to buy it? And the majority of the time, what happens is people say, oh, because it's down. To me, that's not a reason to buy it. This, something like this. Now, again, this is a one-off. Not every stock does this, but so you buy it on a breakout, and it's pretty tremendous. Now, I've also seen a lot of people try to fade this move too. Fade names. Oh, why is it up? I don't see any news on it. Well, because there's people who are buying it. There's institutions that are buying it, right? There's not always news on a down move or on an up move. It's really what institutional traders are doing. They're buying and selling. So there's some disconnect with sometimes what people think moves stocks. What's the news? I didn't see any news on this. Just like the Nasdaq the last couple days, every software name kind of got brought down a little bit. Why? Because we know already they're over owned, and that's where people have been moving to. But you have to think about where people are putting their money versus taking money out. And so here's a good example. So nice kind of story to end the week. Overall, we'll go back to what I really wanted to talk about too, which Yeah, so downside continuation, but I think kind of the usual market dip. So this is the second week the Nasdaq was down. However, I'm always looking at percentage change from open as well to see what people were buying. So it does look like people were taking advantage of that the Qs were down a little bit. But this was not a day like where, I really looked after the morning. After we got through the morning, and this is something that we talked about in the Tribeca Trade Group Q&A session. We do them Monday and Wednesday, and I always do a video for members midday on Friday, and we just made it into a big long Q&A session because I really wanted to talk about some of the things that I was seeing and really to give examples of how I'm trading, right? We talked about that a lot in the Qs, watching the levels in the Qs. So let's dig into that a little bit. We'll just spend a couple minutes here, and then I'll move on and we'll talk about the performance. But we'll start with the Qs because I think a lot of people, number one, have been overweight this group for a while, and I think there's a lot of eyes on it. So we did get a little bit of a hammer bar. Yes, we broke. So a couple observations. This little line that I've got highlighted, that's the 20-day moving average. That's really the first break of the 20-day moving average since April, right? And we talked about this, I think, last week, because last week the Qs were down too. They were down, I think, 1.7%. Let me just look at my... This week they were down 1.5%. Last week they were down 1.7%. So this is the first break of the 20-day moving average. And let's kind of just see how it materializes. Right? Again, for me, and everybody has a different time frame. And by the way, everything that we're going through in the video is for information purposes only, not giving out any advice or recommendations. But for me, you have to think about things in terms of different time frames. Some people have been looking for a dip for the long term to add risk to their 401k, their IRA, right? That's different basically than what I'm looking at. I'm looking at more of the midterm, short-term stuff just to kind of see where we're going to go, because I have a trading account and then I have the tactical portfolio, which is more of a medium-term trend following portfolio. So for the Qs, it's the first break of the 20-day moving average. Is it the end of the story? Like, even if we come down here and visit this top of value, what do I think that'll be? Probably a good buying opportunity. So right now we're kind of caught in the middle, and we do have this break of the 20-day moving average. So I think you kind of have to pause a little bit. And that doesn't mean that you have to stop trading, right? Today was a really nice buy the dip opportunity. So let's go through some of the shorter term charts. One of the things that I'm going to come back to the Qs in a minute, but let's talk about Apple for a second. Apple, similar thing, right? It broke. We have a decent break of the 20-day moving average here, but we're sitting back to top of value. So it could be a buy the dip opportunity. We're just going to have to see how this shakes out with earnings. And keep in mind, it's not only Apple that reports next week, but it's Amazon, it's Google, it's Shopify, as well as like 15 other big companies that report next week. So it's going to be an interesting week next week, and it's going to like kind of get your popcorn out, and we're going to see how this materializes. I think that the more that these companies come down into earnings, we've talked about already several times this week that an earnings trade really hasn't been, putting on a trade specifically for earnings has not been the trade. It's been a sell the premium type earnings so far. But if some of these names come in a little bit further, they may set up an opportunity to actually put on an earnings trade. So that's the positive to kind of take away from this. And also, let these moves kind of play out a little bit. So with Apple, for example, I went after Apple today and made some money on it. There's a virgin point of control that was taken out, and notice that we went pretty far down into this. But to me, this was, okay, we've taken out this level. That's a good thing. And I positioned a little bit, but I didn't get greedy because I just didn't know what type of bounce we were going to get and if it was going to be sustained. So that's the whole thing. I put on an Apple position for next week. I said, an Apple starter, and I always leave myself room to add, especially with high volatility. But 940, and then I averaged in there at 765, right around the low of the day. And then I was able to kind of take this thing off 970, 940, and then I got out here at 1050. So that's a nice little trade. So put in your pocket, and then wait to see what happens. Because if we move to the 5 minute, so it's always looking at different things, and we actually did get into value, but I unwound. I was looking for this to this. That's it. That's all I was expecting for today. And I did that with a number of other trades too today. I did that with Nvidia, and this actually went further than I thought it was going to go. I actually unwound this in here, and that's fine. So I didn't get the whole thing, but this was a nice trade option wise, because also notice that we hit top of value resistance on the 1 hour. Again, super short term stuff, right? This is a 1 hour chart. Also with the Qs, if you kind of follow along, and this is basically how I look to set up trades, is that looking for a bounce and then realizing where there's resistance. So that 5 minute and the 1 hour, you got to get through that overhead resistance for the day, and we could not do that. So that's the Qs for the day, and that was the trade for the day, was just to kind of scalp a little bit. And you take what the market gives you. And then also notice how the resistance was there too on the 1 hour. So again, it's one of those things that you learn over time as a trader, to not be super greedy. If you're trading for the short to medium term, know where your resistance lies, and then set up the trade as is. So next week, the level that we're going to have to watch for the Qs is going to be 257.39. And above that, and who knows, the way that Mondays have been going is that this market likes to gap up into them. But we don't know. That's not guaranteed that that's going to happen for this week. But that's the level that I would watch. So basically, if the more that you kind of use this type of approach, you're taking the emotion. You're taking, when the market's moving fast, we can slow down a little bit and look at the levels and then make some decisions. Because if you look at the way I traded, that was basically, and I tried a couple different things. I didn't know how this day was going to materialize. I was thinking the way that yesterday ended up, that small caps might actually be the index that outperforms, and it didn't happen. That they were down 1.5%, and they sold off further. So this should actually be highlighted in red. So again, you could have some ideas, but it's really, you have to adjust to what the price is giving you. And I thought, we did see a little bit of call buying in Goldman today, but if it's not going to work, it's not going to work, especially with a short-term trade. So I got out of this one for a loss. I tried a little bit of Abbott too. That one didn't work either. And if it's not going to work and I'm in short-term calls, I just blow out of them. I just get out of them quick, and I move on to something, a little bit more appetizing. Crowd was another one too that I had started a trade in yesterday's dip that I talked about in yesterday's video. I added to that this morning, and then I was able to get out, make that a profitable trade. Again, not being super greedy here, because I'm just taking what the market's giving me, right? I would love to have a double or triple today, like Sam Adams, but this was more, hitting singles and maybe a double or two. And then for the rest of the afternoon, what we talked about in the Q&A session today at 1 o'clock, I said, hey, I'm looking for some trades, but everything was just hitting basically resistance. I'm trying to think of some of the stocks that I looked at, but like PayPal on the 1 hour, it did not give me a signal. So sometimes, and again, I was excited to hey, buy the dip in something, but some of the stuff just was not firing off signals. So again, just something that you learn going through the process, and what the market webs indicator helps me with is to not force trades when they're there. Now, if PayPal would have gotten above value, I would have tried it. And if it went back below, I would have been pissed because it would have been a little bit of a whipsaw move. But so I just kept looking, and I was saying that to members of like, hey, I'm looking for some trades, but I just don't see anything that's lining up for a break above value. The two scalps that I'm basically looking for is either, or three scalps is like the Apple one, right? A move, if we go back to the 5 minute, just a move into the bottom of value. So that's a scalp. Another one, like I was looking at CrowdStrike at the end of the day, once a name gets into value, then I'm looking for a scalp through value, or maybe NVIDIA would have worked better for that one today. Hindsight always 2020. This one did make it through value, but again, it didn't even make it to the other side of, had trouble making it all the way to the one side of the value area. So that's the second type of trade. And then my favorite trade, of course, is like a check back into the top of value and then breakout. So those were the trades that I was looking for today, and they just weren't there. So sometimes it is what it is, and you live to fight another day. Remember, trading, you have to think about it. Get your mind out of just one day, 1 week. Think about it for the month. Again, I always talk about with P&L when I put together my P&L video for the weekend. I'm sorry, not for the weekend. For the end of the month. It's Friday. For the end of the month, I'm always looking to win the month, right? Not any particular day. I do like to string together positive weeks. But really, it's the month that I care about. So if it's not there, don't trade. If it's not there, basically, especially not short-term options, right? If you look at what I did today, I've talked about for a while now, for the last couple of weeks. If you're a regular viewer of my video, you know that I've talked about. How earnings season is difficult to swing trade. So what am I swing trading right now? Stock. I'm not really putting on many option trades other than for quick scalping, day trading opportunities, right? I'm really concentrating on, PHM, Pulte was a trade that I went after. Again, name that saw some call activity today, was fine, but in stock, it doesn't really matter to me too much if it chops. Of course, I want it to break higher and hit targets, but if it just chops, I'm okay with stock, right? I'm not going to lose. If in a choppy market I'm in options, short-term options, right? I've talked about that this week too. It's going to be a painful experience. The other thing I'll just talk to briefly is that with the NASDAQ down 2 weeks in a row, there's going to be some good opportunities that materialize from this, in my opinion. But you just have to wait till they develop, right? So going in too early can also cause some pain. So don't worry, we're going to find the setups. We always do. But you gotta let them materialize, right? So that's the main thing, is to have that patience. It's tough to have patience, right? Because we all want to make money, right? That's the whole story. But nothing wrong with this. Same thing with the S&P. Again, you have to. Another thing that comes with experience is you learn to love pullbacks. You just have to make sure, I talked about in yesterday's video that we've been pretty blessed and haven't had too many multi-day pullbacks. But if you're playing the game right and risking less and then waiting for this and then kind of stalking the setup, you're going to find some good stuff. But you have to, in the course of that, try not to give back your profits from earlier in the month by trading too much. All right, so I hope that helps a little bit. And again, the other thing that's kind of interesting to me too, which I've been talking about, something that I've been noticing, because I do play things more on the long side, is that I'm doing much better in the beginning of the months. And then towards the end of the month, it's a little bit like in that middle section of the month towards, let's say middle to 3/4, almost to the end of the month, the price action isn't that great. I've noticed that for like the last 3 months. So I don't know what that means. It's just a pattern that I've noticed. And so my goal is not to really, that second half of the month, try not to give back those profits from the first half of the month. Again, just something I've noticed the last couple months, and you may have noticed it too if you've been playing things, mostly from the long side of the market. Now, one other thing to talk about. Wow, I've already talked for 19 minutes. VIX bullish divergence. That may be something good because look at the VIX is down 8%, and so is the market today. So that's a bullish divergence, right? Sometimes it's a warning sign when the market is up and the VIX is up. Well, today the market's down and the VIX is down. So I view that as a bullish divergence. Same thing with the VXN. Now, again, these weren't big things, right? If we look at the VIX, it was only down 1%. So it's not like, oh, I'm going to jump into the market. Just one of those things to kind of note a little bit, that the VIX was down today. Same thing with the VXN, which is the VIX for the Qs. But I would say that's not really a sell signal. If you look at the chart of the VXN, could it go higher there because it is above these short-term moving averages? It could. So that's VXN. What else did I want to look at? The put-call ratio. Where did the put-call ratio go today? Right, because that is a gauge of complacency. We ticked up a little bit in the put-call ratio. Again, let's get that complacency washed out of the market a little bit, right? I talked about this a little bit yesterday, how it was starting to move in the right direction. We like to see this get to show a little bit of fear in the market. Get a little bit of fear in the market, and then people get caught on the wrong side. They're buying puts at the wrong time. So that's a step in the right direction too. So again, let it play out. Let's go over the performance. Last look at this. What was interesting for the day is that biotech. I usually like to see biotech participate. Kind of lead us out of a market dip. So maybe that's telling me that that's not there yet. There was also some news about drug pricing or something too that came out today. So I think that was an overhang on that as well. Next, the performance for the week. So here I highlighted the Qs. I talked a lot about the Qs. They were down 1.7% last week, so 2 weeks down. So maybe that sets up nicely for next week. Not a lot of really talking points here in the overall indices. They were all down too. The rest of the indices, SPY, Diamonds, IWM, they were down for the week. So again, while this is going on, if you're playing the market to the long side, if you're flat to up a little bit, you're doing a really good job. Interesting emerging markets were up this week, and then look at this guy, gold, up big, up 5%, really, really strong. Again, that's if you go back to our tactical portfolio and the TTG portfolio. Again, notice how organized we are here. TTG portfolio. Notice that I put in. I put gold back in here somewhere. Added. So this was back on July 7th. So I added KL and I added gold. By the way, if you look further, I took gold out at one point because it wasn't doing anything. This is Barrick Gold, by the way. And then I put it back in. So I've got a couple gold miners in here. I've got TLT in here. So I've been getting a little bit more defensive. And then, this week I did decide to take out a little bit of tech exposure. I did that yesterday. And just to get a little bit defensive and just to see how this plays out through the rest of earnings. So, but huge gold performance. And then this is basically, if you look at these sectors, you basically had a pretty decent value outperformance, value rotation for the week. OIH up 9% for the week. Gold miners, 6.4%. Regional banks up almost 5% for the week. Home builders up 3.9%. It wasn't all value. There was some growth in here. But, big step down for biotech this week, down 5%. Tech also taking a breather. Chinese internet's taking a breather. So some interesting performance. Let's look at last chart. And then, of course, what we do on the weekend is I provide a lot of content for members, probably too much. We trimmed down this week's macro video. It was 30 minutes. I'm getting better. At one point, it was an hour video for the macro. I try to get that down. I'm going to continue to try to condense that to like 20-25 minutes for the macro video. And then the fun video, of course, that we send out is the watch list video, where I talk about all my setups and lay all those setups out with triggers and levels to watch for possible breakout or moves into consolidation in uptrends. So what am I looking at here? I want to see how small cap value did versus growth today. We talked about this yesterday. Again, rallying off the lows a little bit. And then if we look at the other one, that's small cap. Let's look at IWD. IWD versus So again, this is large cap value over large cap growth, and you could see value's been outperforming the last few weeks. Not in here, but overall for the last couple of weeks since the middle of July. Notice we did this too in here. So I think this is running its course. So I'll give you my personal opinion. But I don't have a crystal ball. Again, I'm pretty neutral, but I do like to come up with theorized ideas. I think it's good to see value outperform for a couple weeks. We don't want to see things get super stretched the other way, right? Then you have a much more violent rotation, and those are painful. This, I think, is quite normal. Let value outperform a little bit. I really don't think that banks are going to be the group that leads the market. That's my opinion, because there's a lot of banks and energy. I don't think those are going to be two of the areas that outperform the market going forward, but I think it's good that they bounce. All right, we'll leave it there for the weekend. A lot for members, a lot of content that will be coming out for members. If you're not a member of Tribeca Trade Group, get on board, sign up, go to TribecaTradeGroup.com, and you can see what we do and how we get the week ready for everybody going into Monday. Have a great weekend, everybody, and I'll see you guys back on Monday.